No.
So let me introduce our distinguished speakers. We have Burkhard Balz, who's from Bundesbank, Ardo Hansson from Bank of Estonia, Boris Vujčić from Croatian National Bank, and Zoja Razmusa is from Bank of Latvia. But let me start by introducing also each speaker in sort of a little bit more and kick off our discussion with some warm-up questions and then on which you hopefully can answer in 7 minutes or so. So Mr. Balz is executive board member of Bundesbank, and he has managed to combine fire and water, politics and banking. He was in banking for 10 years, then he was a member of European Parliament for 2 terms, and now since last summer he's back in banking. But which is very important to note that Mr. Balz was a rapporteur on Latvia when he was a member of European Parliament, and he did a report on Latvia joining Euro, and based on this report, European Parliament voted in favor of Latvia joining Euro. So let me take you 6-7 years back in history. What were the main challenges when you were doing the report? What were the main challenges from European perspective when we look at the process of Latvia joining the Euro? And I mean, of course, we understand that it's not only about fulfilling quantitative criteria, it's also about political support. Were there really such a unanimous political sort on the European level about Latvia joining the Euro, or were there also some skeptics in Brussels or in other capitals? Mr. Balz.
Well, first of all, let me thank you for the kind invitation. It's an honor to be again here in Latvia, and as you rightly said, I was in 2013, 2012 and 2013 the rapporteur of the European Parliament for the Euro accession of Latvia, and it was a very interesting time, as you could imagine, because I could remember quite easily that there was a broad majority here in the country against the accession to the Eurozone. I think it was 63% of the people who were against, and as a member of the European Parliament, I, of course, started then discussions with my colleagues in Brussels and Strasbourg, and as parliamentarians, as you could imagine, we looked very sharply on what the people here in Latvia thought about the Euro accession. So I came several times in 2013 to Latvia, discussed the issue with many stakeholders. I remember some of the discussions from then very, very well, and that were really lively discussions, I can tell you. But I was convinced right from the beginning that Latvia should also join the Eurozone, and in all of those discussions I made that very clear that I will try everything to convince the colleagues in the European Parliament to approve Latvia's accession to the Eurozone. You have to think about what time we had at that time. We have gone through a crisis. Not only your country had gone through a crisis, we had the financial crisis in Europe, and despite this fact, Latvia recovered, well, from my point of view, really, really well. So the preparations which were made here in the country were very good, and at the end this was also the main argument in the politics, in the parliament, to approve the Euro accession for your country.
But I would like to push a little bit more. Were there all political groups in favor of Latvia joining the Euro? And could you see there may be regional differences? Some countries were more skeptical about Latvia joining Eurozone.
As far as I remember, it was not so much an issue of specific countries were against the euro accession of Latvia. It was more or less an issue for some of the political groups who were more or less against the euro, who were against the euro and the eurozone. And those, of course, were then also against Latvia's accession. But this was not only the case by your country, this was also the case by other countries who joined the euro in this time. It was when Estonia joined the euro, Lithuania 1 year after Latvia. So at the end, it was more a political issue, not so much a country issue.
And when the parliament voted, the vote was very convincing. How did you manage to sway the opinion?
Well, it was hard work before, but at the end, most of the political groups were convinced that Latvia will become really a good member of the Eurozone family. And until now, 5 years later, I think you have proven very, very well.
And they don't regret their decision, I hope.
Yeah, absolutely.
Thank you. Ardo Hansson is governor of the Bank of Estonia. He's also a Harvard University graduate with a PhD in economics. And he has been on supervisory board of Estonian Central Bank, and then for 14 years he left and worked for the World Bank. And now 6 years ago he returned and became governor of Estonian Central Bank, and it was in 2012. A year after Estonia joined the euro. Estonia was the first country from the Baltic states. It was the first one to join euro back in 2011. It was just 3 years after the financial crisis. What kind of impact did it have on the whole process? Also, when we look at the latest Eurobarometer data, we can see that the support for the euro in Estonia is among the highest in the whole Eurozone. It's 85%. What is your secret recipe? And why Estonians are so much in love with the euro? And can central bank claim any credit for that?
Well, thank you very much, and again, congratulations to all of us, I guess, in Europe for both the 20-year anniversary and to Latvia for the 5-year anniversary. And I also always thought the time has actually flies so quickly, because I remember this Euro introduction conference that was held in Riga about 5.5 years ago, and it seems only yesterday. And another important milestone, I think, along the way was the meeting of the Governing Council of the ECB here last summer, only half a year ago. And I think that was quite an important meeting where important decisions were taken and very well organized by Latvia's Banka. So congratulations for that as well. And it's an honor to participate. Now, I think the timing was ex ante, it looked like a very bad timing. Ex post, it might have actually turned out to be beneficial. And I think in this room, there's no need to kind of repeat the challenges that were faced at that time, because this was an awful time to be joining. This was not only the global financial crisis. You had then, of course, for small open economies were probably impacted more than the larger economies. Second, as in this country, the rather massive housing bubble was collapsing exactly at the same time, which was putting downward pressure on the economy. And the third feature was that in order to join the euro area, you were being measured against the Maastricht criteria, which said your budget deficit, even in those brutal times when the GDP was maybe declining 15% a year, you still had to somehow squeeze it into 3% of GDP. So apply brakes to an economy that was already doing poorly. And the fourth thing was to do this all without an IMF program, because the moment you're in an IMF program, probably the idea that you're on a sustainable path is going to be quite difficult. So we had this phenomenon too, where I think the Vice President Boris mentioned of the last ticket for the Titanic, and why are you doing this when this looks, you have a chance to say no, and you keep on going. And I think there was just the decision to go was taken such a such a long time ago, and I don't think it builds your credibility if you're a fair weather friend, and when times are good you want to join, when times are bad you jump ship. And I think the second point is that the change wasn't actually so dramatic, and it wasn't like probably in this country on December 31st you feel one way and then you wake up on January 1st and life has somehow suddenly changed. The process of introducing the euro is a very gradual one where you build the institutions and do the reforms for many years. And when you're starting from a currency board system, as we did, actually we were pretty close to the euro anyway. So the kind of change that was involved in taking this last step was maybe not so big as in a country which had been used to, for instance, pursuing flexible exchange rates. I think the biggest benefit at the time was clearly getting rid of this interest rate spikes that would come from at moments when there was kind of speculations about the possible devaluations, and getting rid of that kind of revaluate or redenomination risk, if you like, was probably the biggest benefit. And all the other benefits, I think, were kind of more harder to measure and will come out over time. I think one positive thing in retrospect, I say in retrospect, it might have actually been a good timing, was that we had this terrible V-shaped, or a very acute V-shaped recession where the economy was going down in 2009, 2010, and just when we joined the euro, we hit bottom and the economy started to recover in 2011. So probably, maybe one of the reasons why the support is so strong is that you didn't have this association with the bad times. I don't think there was a link to the euro adoption, but it happened that the euro came when we happened to start growing. And if it had the euro come, let's say, in 2009 or 2010, people could have said, okay, the euro came, everything went downhill, and it was a mistake. So in retrospect, maybe that kind of turned out to help us. Now, on these different, why is the euro so popular? And I mean, there are different surveys. Some of them, it depends how you ask the question, whether you're talking about what do you think about what's good for Europe as a whole. And really, the standard Eurobarometer, we're now at the top of this list. It was 88% said the euro is good, and 7% said it isn't. So kind of the balance was rather strong. And these things shift. I think there are about 4 countries usually: Estonia, Ireland, Luxembourg, and Slovenia, which rotate around the top 4 every time there's somebody different. But what I noticed in the last one is Latvia was actually in 4th place, which is very an impressive performance to come from those ratings of 35, maybe 50, I think 50-50 at the time the euro was introduced here, to get up to levels of 80 plus. So I think the Eurobarometer surveys show those that are in generally like being in, those that are out generally think they like being out. And once you make the shift, then slowly people, as Vice President Dombrovskis said, start realizing it wasn't actually so bad, it's actually quite good, and the popularity starts creeping up. Lithuania seems performs quite differently in these ratings, and I have no idea why that might be. I don't think it's because we have excellent central bank communication staff, but I think Latvia and Lithuania have them too. So I can't say that this is the secret ingredient. It must be something else, but actually this is more for political scientists to sort out, I think.
Because in Lithuanian, the support for euro is on the level of Greece and Italy, 67% only support, so which is surprising, yeah.
It's surprising, but maybe one of these things is it just, since they were one possible hypothesis is just they've been on this road for somewhat less time, and if we've been on the road for 8 years and they've been on the road for 4 years, maybe in 4 years' time those numbers could be very similar, so, yeah.
Okay, thank you. Boris Vujčić is governor of Croatian National Bank, and he comes from academic background. He has been associated professor of economics, and almost 20 years ago he became vice president of Croatian Central Bank, and for 2 terms, and then he was appointed as a governor of Central National Bank, and he started his 2nd term just last summer. Mr. Vujčić, Croatia joined the EU in 2013. And back then you said that you would like your national currency, kuna, to be replaced by the euro as soon as possible. That has not happened yet. And also public opinion seems to shift away a little bit. If we revert back to the same Eurobarometer, then it's down to 40% of support. What do you think, what are the most challenging aspects for Croatia joining Euro? And do you see that there is political support in other member states for you to join the Euro? Or it's mostly European Commission and Mr. Dombrovskis, who is, you know, on the cruciate together with you, and the rest of the EU member states are a little bit sort of reluctant for your membership in the Eurozone?
Well, let me start from the beginning of your question. I must say that for us the main challenge so far, after we, of course, got on the path of the recovery, which is important to say, we had a long recession after the financial crisis, which in our case was much less financial because banking sector was okay, but it was more a real sector crisis. In 2014, for example, the public debt to GDP ratio was 86% of the GDP and the unemployment rate was 17%. But now we're entering into the 5th consecutive year of the recovery, and the public debt to GDP has been put down on a declining path. So this year we expect it to be at the 70% of the GDP, down from 86, and also unemployment rate to come to very close to the EU average. So I would say the economy has structurally changed after we joined the European Union. So the entry into the European Union was also very important in that sense, as it boosted primarily the exports, goods exports, which were growing after the entry into the EU by 10 percentage points per year. So in that sense, then the situation became, I would say, ripe 2 years ago to start to think of entering the Eurozone. Well, first question and a challenge, as you would put it, was that it was not clear actually how you get into the ERM. After the first wave of accession to the EU in 2004, countries that joined the ERM all joined within 1 year. The last country that joined the ERM was Slovakia in 2005. After 2005, nobody did. So it was not exactly clear how does that happen, but that has been cleared up within the last year. And now I would say the path is clear. We have to also get into the close cooperation, of which intent we already informed the European Central Bank, and now we're discussing with our European partners on the letter that will be sent for the joining of the ERM this year. In terms of the support, I would say that I haven't any partner in the Eurozone that I talked to didn't sound discouraging. On contrary, so I wouldn't say that it's only European Commission. I would say that this support is much more broad-based, and in a sense it would be awkward to be different because we know that there are 2 countries with the opt-out clause. Maybe there will be only one soon. And all other countries actually have to join the Eurozone. It's our obligation that we signed upon entering into the European Union. So in our sense, this is a completion of that project. And I always say that for Croatia, it's of particular importance, and Croatia, in my personal view, is the country to benefit most from joining the Eurozone. Why? Because out of the countries that are out of the Eurozone at the moment. Why? Because first, it's the smallest one still out of the Eurozone, and second, it's most Euroized one. We already de facto, in a way, are partly in the Euro, as 70% of the savings in the banks are in euros, and the same proportion of the loans are linked to the euro in Croatia, because banks have to hedge their liability and asset position. So since most of their funding comes from euro, they also index then the asset side. So we have this built-in foreign exchange risk in the financial system, which we can do away only by joining the Eurozone or doing reverse currency substitution all the way back, which is something that we have not been able to do for the last 25 years. So it would take a very, very long time. When we became independent country, in deposits of the banking system, we had 91% of Deutschmarks at that time. So basically we became Euroized when Germany switched to the euro, automatically passed on to Croatia. And this is the position now that the level of the Eurozation is smaller, but it's still prevalent. And that's why for us the euro adoption is, I would say, natural exit from that situation, and it would definitely reduce the foreign exchange risk greatly. To give you a different illustration, maybe more plastic, and this is something which I will end then, is 150% of the Croatian GDP is linked to a foreign currency or in foreign currency. So debt of all sectors, government, corporate, and household. That means that 10% depreciation of the domestic currency increases the debt by 15 percentage points. This is why you cannot use the exchange rate policy to boost the economic activity. On contrary, depreciation of the domestic currency acts pro-recessionary because it increases the debt levels, so the households have less money to spend, corporates less to invest, and the government either has to increase the taxes or reduce the revenues. No? So both all C, I, G, they all go down, and then the current account, X minus M, cannot make up for fall in the domestic demand through the depreciation. And that's why I say that, you know, when you don't have for exchange rate policy as a monetary policy tool, then why would you keep it? I mean, when you get nothing to lose. It's much better just to join the Eurozone.
Well, as a banker, you probably shouldn't be involved in betting, but if I would ask you to bet, when Croatia be part of the Eurozone?
Well, I would say we don't have a date. We don't mention a date, as you know, and we will not do that. But our plan, as we said, is to join the ERM next year. No. After that, we have to satisfy the Maastricht criteria. A year after, the European Commission makes a decision whether a country has satisfied or not Maastricht criteria, and then we can join the Eurozone. So for the moment, our goal is ERM first, close cooperation. We are already getting prepared for the close cooperation with the ECB, making legislative changes. We'll be preparing the banks for the AQR that will precede the joining of the SSM. And after that, it's going to be up to the economic performance. But I can tell you that in last 3 years, we've been satisfying all Maastricht criteria, and all forecasts for this year show that we will be satisfying all Maastricht criteria also this year. So I would be quite optimistic that we can meet them quickly after we enter into the ERM.
So 5 years, and then you have the euro?
You said that.
No, I'm asking.
I'm not going to say that, but you're good at math, I would say.
Thank you. Zoja Razmusa is a deputy governor of the Bank of Latvia, and she has been with Latvian Central Bank for more than 25 years, and she also comes from academic background. She has worked in the Academy of Sciences before, and almost 5 years ago she was approved as deputy governor of the Central Bank, and now she's representing Latvia in the Governing Council of the European Central Bank. You have witnessed our road to the euro from the very early stages. Let me ask, sort of, this question comes up again and again. What were the main challenges? But in the context that what would be do's and don'ts or lessons that you could pass on to Croatia, for instance? What from our road to the euro we can what kind of lessons we can draw from the upcoming members of the Eurozone?
Thank you. I think it's really enjoyable to see our colleagues in the panel. Latvia is a member of the European family already from 2004, and our journey to the euro, I think, was really unique. differently from those countries who joined the euro or built the eurozone itself. The difference was that on a halfway road to Europe, Latvia experienced full-fledged, you could say, crisis, and there are several lessons we could mention, and I think it's not only Croatia, it's whatever country which decide to join the euro. One is each country need fiscal buffers and have to deal with structural inefficiencies. Doesn't matter, actually, even if it's within the eurozone or joining the eurozone. Because having no financial buffers during the crisis makes this journey much, much difficult and really painful experience. The second lesson is that independently, again, on a country, that's up to the country to decide what kind of reform. Is there support for reform? Is there support to do reforms and really do reforms? Because really, as we say, fundamentals matter a lot. And even after joining the euro, if country has a lot of structural weaknesses, nevertheless, earlier or later, and we know experiences afterwards from eurozone countries, that you have to deal with that nevertheless. And I think it's very often then we always say those or somewhere pressure, but actually it's to the benefit of the country. If you do the reform, if you move ahead, make more resilient, more efficient, more sustainable to shocks, the stronger your competitiveness and the longer the economy really is on this sustainable path. I mean, banking crisis or whatever financial crisis, that's phenomena which probably will continue and have been for a long time. Then I think one of the challenges for sure is also, and yeah, Latvia chose this exit strategy, joining the euro. And I think all policymakers, not only central bank, but central bank including, really have had a lot of tasks to do in a relatively short time. And I think at the end, for sure, we succeed to join. But I think one of the challenging tasks in any country is really to pursue people to do those reforms. Because we very often hear structural reforms, and this slogan sometimes should even questionable. What does it mean? But it's really about how competitive the country is in the long run. Is fiscal policy sustainable? Are policies really supporting competitiveness? Is education level sufficient? Are people healthy enough? And that's what the country really should strive, whatever country. In our case, like our Baltic colleagues as well, or countries experienced, there for sure was such emotional part like national currency, and entering Eurozone meaning that you give up some sovereignty like national currency. But at the same time, if you look nowadays back, just on recent years, then I think it's obvious that small and open economies have really, it's also proven by practice, not only theory, they have very limited scope for monetary policy, especially in a very, very turbulent time. And if you look even on nowadays on emerging markets and on spreads, how they widen on reversal of capital, that really proves that, you know, if you are small and open, it's not too much you could do in turbulence time, particularly in a small and open economy. And then I think one additional, yeah, and for sure, I mean, entering the Eurozone, it's quite beneficial, and I think promises what we did, like diminishing risks, like more safety, like decreasing costs, like improving financial conditions. That's all came with the euro, and I think after 5 years, all of us who are in businesses or households for sure could say this, that's for sure. I mean, economy saved a lot and still continue to save, and financing conditions are much, much better. But at the same time, I think, at least my perception is on my country, I'm sure that Baltic colleagues think the same. We have this saying, nothing falls from sky. I mean, nothing is automatic. And as it was mentioned in the first panel, for sure, that being part of the EMU, it's environment, it's a stance, it's where you are, but everybody knows that currency itself is not really the magic one. It can't solve all your problems at all. And then, as I mentioned, you are in Eurozone or you are joining to Eurozone, still a lot needs to be done to stay competitive and really having this sustainable growth for our future. And I think my last remark will be regarding this public widespread concerns on increase of prices during introduction of euro. And I would say there are also advices from Latvian side. First, whatever country already are in euro, and Latvia was another demonstration that material impact on prices is very, very limited or not at all. But what is for the trust of the introduction process as well, I think stipulating relatively long time, having quotes on prices in both currencies really helps. But I also understand Croatian colleagues, we were very Eurotized economy as well, and people even used to have a euro. But nevertheless, I think it's really very, very supportive. And also in Latvian case, we have business awareness campaign, which was voluntarily. And 2/3 of merchant companies, service providers joined this campaign really to show, to have neutral impact from euro introduction. And I would say it's really also, at least in our case, helps that and really make more confident people that it's not. For sure, nobody could say in which independently on price you join the euro. This interplay of foreign and domestic demand factors for sure and supply factors might have an impact on prices, but then you have to really show that it's other factors.
But also after the joining Eurozone, the role of the national central bank changed a lot. Was this a difficult sort of soul-searching process, how you found your new place, your new raison d'être?
I would say my reading from being in some audiences in a country is that after the joining euro or Eurozone, central banks have less workload. Many people are saying, what you are doing there? I mean, euro is there, so what else?
You all can go
somebody there, decide somebody, but if you ask colleagues in any, I think, national central banks, then the answer for sure will be that the workload just increased much more. And why? Because you become responsible also for decision making, not only on your country, but within the Eurozone, meaning that analytical background and monetary policy decisions, instruments are really prepared by the ECB, where we have the same vote as other national central banks. So it's one part, and also I think Eurosystem itself is a system which strives to be innovative, to develop payment system, to have currency which is safe, also banknotes. And there are a lot really things to do more and more. So I would say adjustments, at least in case of our bank, was really smooth. Everybody understood that we just continue to work, and I think quite successful. think we do quite well.
Thank you. And I have a question for all of you, and it's probably sort of the thing that worries people, especially the countries who have gone through serious financial crisis. Is Euro and Eurozone now more ready for financial crisis? And it was already touched upon in the first panel. And European Central Bank has warned, and let me quote, that increasing protectionism globally, political turbulences in Eurozone area combined with turmoil in some emerging markets have made Eurozone's financial system more vulnerable to shocks. To what extent national central banks can be of stabilizing help?
Well, of course, the debt crisis has raised a fundamental question, namely whether a monetary union combining a single monetary policy and national economic and fiscal autonomy can function over the long term. A construction of this nature may create additional incentives to take on debt, particularly if there is a prospect of the cost of this debt being shifted at least in part or to the other member states on a higher level. Economists are familiar with this common pool problem from other areas. So this challenge was recognized even at the beginning of the monetary union, and indeed a fiscal union is one way of creating a balance between actions and liability at the fiscal level. Overall, events of the past appear to confirm that euro area countries want to continue to take their economic and fiscal policy decisions autonomously. In that case, they will have to remain liable for the actions, and to ensure that this is the case, the no bailout principle would have to be strengthened and an orderly procedure created to restructure then also, for example, the government bonds. So from my point of view, there were taken useful steps by the heads of state and government last December. And I hope that, of course, the European policymakers will continue to go down this path.
Thank you. Mr. Hansson, are we ready for the next crisis?
No, I think we're never 100% ready, and we never know exactly when it's going to come. All we know is that one way or another, something like that should probably happens every once in a while. I think in one sense, we're much better prepared, and I think the Vice President Dombrovskis mentioned this in terms of all of the progress that's been made on not only banking union resolution, but also the ESM and all of the crisis backstops. I think the banks are much more, in general, are much better capitalized, and so on. So I think the financial sector is in much better shape. I think there's progress that can be made on the capital markets union. Again, as was mentioned in the last session, if you have that kind of private sector risk sharing, that can be much more powerful, actually, as I think the American example shows, much more powerful than trying to rely on fiscal transfers to cushion these asymmetric shocks. Now, maybe capital markets union is a bit more of a technical project and maybe less politically sensitive, but much more difficult in the sense that it involves bringing the private sector along. So on the other hand, I think one place where we're maybe less prepared is that the policy space is more limited than it might have been like 12 years ago, both fiscal policy space and I think also monetary policy. We've used a lot of ammunition, and I think we have to recognize that there's a premium now. I think the IMF in its reports last October really stressed this point, that countries should be restoring policy buffers now and building up space. So those are the countries that can. So I think at the margin, if we have a choice between various policies, those that help us rebuild some policy space have a premium. As far as protectionism is concerned, of course, this is a big risk. But I think one really big benefit now of being in the European Union is that we don't need to worry about that among ourselves, and to the extent that we trade among ourselves in a very turbulent world where countries are thinking about these options, we know that there are 27 or 28 countries which are going to trade in a much more secure environment. And again, we don't know what would have happened had we had 27 different trade policies. So let's look at the European integration as a very positive aspect in that respect.
Mrs. Razmusa, what is your take on that?
After what colleagues have said, I think there is one more aspect. For sure, that the EMU itself is, or Eurozone itself, much stronger than it was when previous crisis hit. That's no doubt about it. Also, monetary policy being very, very accommodative is combined with macroprudential policies as well, at least to buffer some asset bubbles built. But I would say still, if we think about what we should do when the sun is shining, it's not just monetary policy, right? It's a set of policies, and that's again those who are with fiscal policy, with structural policy. Really, still there is, I could say, room for sure that in Eurozone and Europe itself, high levels of debt is one of the, you could say even burdens, because for sure with a changing environment, this burden might even more increase, and this also diminishes the scope for fiscal adjustments if it's needed. But it doesn't change, you could say, common stance, yeah, that you should just do.
But do you think Latvia is doing enough in this?
No, I don't think so. Why? I think overall, on one hand, for sure, fiscal policy is much more responsible, that's for sure. But on the other hand, if we refer to Latvia, then each year when the budget is considered and approved, there are, you could say, promises that the fiscal buffers will be built next year, right? And this next year never comes. And then I ask myself, haven't we learned from the previous crisis that really you shouldn't be so procyclical? I think every country is aware there are a lot of needs, but then you should prioritize and still have buffers in the time when you are growing more than 4 or 5%. Yeah. Otherwise, if it's really slowed down or really you have a shock, then we know what happened and what we should do again.
Thank you. Mr. Vujčić, Croatia is not part of the Eurozone yet, but when we sort of think about the readiness for the next crisis, is Croatia's answer, we join the Eurozone and then that's sort of be our sort of insurance policy, or you are trying to sort of prepare Croatia if something happens and you are not yet in the Eurozone?
No, I don't think that joining the Eurozone is an insurance policy against the crisis. You had lots of countries in Eurozone that had a crisis. As John has said, some did, some didn't have. And it didn't depend on whether they were in the Eurozone or not, but it depended on their other fundamental economic circumstances. So this is why every country should focus on the fundamentals rather than bet on the euro to save it from the crisis. It is good to be in the Eurozone, of course, particularly for a small open economy which is euroized. So for us it's definitely benefit, but it will, if you don't do other policies well, that will certainly not save you from the next crisis. During this crisis, for example, we had no problems in the banking system as opposed to most of the EU countries. So we had zero money spent, taxpayers' money on the banks. Banks are very well capitalized, 23% average capital adequacy ratio. So we feel that we are, and we have a balanced growth with deleveraging. So we had 5 years of deleveraging now with growth, coupled with growth, which is a very different situation than before the crisis. I think what most people have learned, and this is why I think that we are better prepared for the next crisis, they learned from the foolishness before the last crisis. If you remember, before the last crisis, people were so optimistic. They were telling us there's a great moderation, that the economic cyclicality is gone the way it used to be. Some people in Europe were saying that the current account deficits don't matter. Many serious economists were claiming that because you have a single currency. The front page of The Economist was talking about Germany as a sick man of Europe, and the countries that later got into problems as the tigers of Europe. So there was obviously great misconception about the real risks and the real role of the euro. Now, hard way, as usual, we found out the truth is not what they thought the truth is. Today, I think we're in that sense better prepared, understanding the situation much better. But then again, we have more debt today than we had then. So the debt levels have actually increased, not decreased. And I see that as the biggest problem. A large increase in debt, and we're talking about, if you look at worldwide, it's both the sovereign debt, corporate debt, household debt, with no inflation to reduce the real level of the debt, and very little monetary policy space in a way. Much less than you would ideally want to have. Now, many people believe that the fiscal will be able to react because it's in a, I'd say, a balanced position in Europe, not in the US, for example. I'm a little bit more skeptical about the effectiveness of the fiscal policy to react in the short run, given the experiences in the past. For the fiscal policy, you know that in order to change the course of the fiscal policy, you need usually at least half a year. It's a budgetary process, budgets implemented, etc. You can do it maybe in the ideal sense in 4 months' time. And then you still need a fiscal space, with a lot of public debt in places which might need it most is not there. And this, I think, is a risk. But it's the risk of a different crisis than we had. It's maybe a risk of more protracted, lower growth rates, less ability to react to the downward cycle. And we'll see. Once it comes, we'll see how it works. But I would say definitely we learned lessons from the past mistakes, and we'll learn more of them next time around.
Mr. Hansson, anything to add? Well, no. We started talking about the challenges for the future, and one of the things that we might see in the future is growing popularity of Bitcoin and other virtual cryptocurrencies. Most central banks have issued a statement that not recommending to use it. But is that is this statement enough to stop the expansion of the new currency? Is it actually, do you have to stop it? Or maybe we might be looking at the crypto euro in future?
Well, when I read recently 2018, the year in review, Bitcoin was often a topic, but mainly because it was a worst year for it since its existence. So over time, you can observe that the attention is closely linked to the price, which means that the growing popularity came here, from my point of view, to an abrupt end. So the central bank community, as far as I know, all of the central banks in Europe observed the development closely from the beginning and analyzed the risks and opportunities. We therefore never had the feeling that we had an uncontrolled situation with regard to monetary policy or even to financial stability. So to give you a feeling on the minor importance of Bitcoin with regards to payments, even at its peak, Bitcoin had only 420,000 transactions per day worldwide. At an average working day, we have in Germany 83 million credit transfers, direct debits, and card payments alone. So I think that we already started to address the biggest challenge regarding crypto tokens when we started within the G20 to look closer into the possibilities of using those crypto tokens for money laundering and also for terror financing. In case crypto token would become more dominant, even further regulatory measures might become relevant. There are some demands now on the European level. Today I read an interview with Stephen Major, the ESMA chair, who demanded their ongoing action now. So from my point of view, the central banks should really attentively follow the issue, and at the moment we are only on the observing side.
What about Estonia? I mean, we know that Estonia is so much about everything E. I mean, is this maybe your kind of future speciality?
I'm sure there's some people who would want to make it. I'll say outright, I think cryptocurrency is a complete load of nonsense and will probably die its own death fairly. I mean, the bubble has already started to collapse, and I think now maybe we should just see how far that collapse goes and what is left when we've reached a new kind of equilibrium, and then think about these issues that Mr. Balz mentioned. I think we will come back a few years from now and say, how could we ever have gotten into this situation where we believe this kind of a fairy tale story? I think one is there will be an issue of investor protection if the grandmothers start investing in that. We may need more than just the health warnings that we've issued so far. Anti-money laundering is obviously going to be an issue, even if it remains a niche subject. And finally, financial stability considerations. If it becomes big, and if the links between these kinds of assets and the regulated financial sector are starting to grow, then you might need to think about financial stability issues. But I suspect this will be an issue that's already past its prime and will be for history.
Mr. Vujčić, do you agree there is no future for cryptocurrencies?
Well, I agree with Ardo. Yeah, I was always skeptical also about the cryptocurrencies. What they promised was speed, was anonymity and irreversibility, but in the end they didn't deliver on any three fully. So I don't see, I don't see a role. I don't see a place. What benefit they would bring. People have burned their fingers, of course. It was a speculative asset where some people made money, others lost, and it looked very much like a typical Ponzi scheme. Those that got first in got payoffs, others lost money, and Ponzi schemes, they usually last once, and then they recreate themselves in another format, but not the same one as that. So I wouldn't be very optimistic or worried, depending on how you look at it on the cryptocurrencies.
Mrs. Razmusa?
I would agree with points mentioned on overall crypto assets, that they are, you could say, mostly speculative assets. But I think there is another angle of this development. It's overall financial innovations. And I don't think that financial innovations will stop or should stop, and therefore sure there is another role for the central banks also to ensure that the payments, not to ensure but to provide, sorry for my misreading, to provide services to the people at ways they would like to see those services. And I think nowadays central bank should provide services around the clock and 7 days. And I'm proud that Latvia's bank was one of the first in Eurozone really providing zip payments, as we call them, which really are accessible and available for the Latvian people and businesses. 90% of them could use them. But also on Eurozone, I would say TIPS project, which is also instant payments. That's, I think, what businesses also are looking for, cross-border payments, fast payments, and I think there's a big avenue for the central banks as well. And regarding digital currencies, I wouldn't exclude, and there are already some examples. So it's really, we don't know how the future will evolve, actually.
Well, it's in your hands to shape it.
But for sure, yeah, but I think there is a private sector as well leading. But central banks, I have no doubt, should be on the edge as well to not only monitoring trend, but also looking what their role in this new environment might be.
I mean, we are celebrating 5 years of the euro in Latvia, but probably if not all, but some people, when you open your wallets, you might not have actual euros in your wallets. Probably no coins. Some might not even have the paper banknotes, because a lot of people decide these days to go cashless. Just use cards and don't carry the cash around. Is that future, and how far cashless can we go?
Well, if that is the future, I think is in doubt, because when you look at the figures at the moment, it's clearly that in the Eurozone, most people are still in favor of using cash. So, for example, the amount of euro cash in circulation is increasing at a faster rate than overall economic output from one year to the next. The Eurozone central banks have now issued almost 1,200 billion euros in cash, and over half of the banknotes in terms of value were issued, for example, in Germany by the Bundesbank. Secondly, I would also mention one political message. It's interesting that it comes from a central banker, but I think the political message within the Eurozone should be that people should be free to choose whichever means of payment they want to choose. So for me, it's not so much a question if cash will disappear. I think the mixture at the end is important. People should really, by themselves, should choose how they want to pay in the future.
Is cash here to stay forever?
I hope so, but it's again, it's no. I think even in Sweden, where I think the thing has gone, the cashless society has gone the furthest. I think a couple of months ago, the Riksbank issued a recommendation. They're saying they're going to require banks to keep on providing cash services, and maybe the recognition is that pendulum had swung a bit too far. So I think, as Mr. Balz said, there's the market should put these things in place. It's nice to have these opportunities to have use both services. And I think one other thing we sometimes overlook is concern that, of course, in much of the world now is about cyber security. And I think having a totally analog technology, which is well established, which is very cyber secure, to complement a very good electronic system, if they both have critical scale and neither one is threatened with disappearing, you have two parallel systems everybody can choose from at one point or another, is much better than having one, either an underdeveloped electronic system which isn't taking advantage of all of the financial innovation, or then one that's somehow so cashless that you create a lot of resilience risks.
Mr. Vujčić?
Well, I would say that this payment system and cash distribution both were always at the forefront of the financial innovation. Fintech was with us for many years. First credit card was in 50s. First ATM was in 67, Barclays. Last year they had a 50-year celebration, if I'm not mistaken, of the first ATM. Then you had internet banking. I remember when I went to open my first internet banking account, and then it came to the mobile And now it goes further. Soon, I mean, you will be walking with your device. You wouldn't need anything because you will have everything contactless, taking things. So this has been with us for many years. Now it's just a new format of the same type of the innovation, and it's good. But it doesn't mean that there will be no cash. You can still have cash, and I agree with Ardo. I would like to see still a world with some cash. Of course, it's also cultural. You know that the cash demand is very different in different countries, and it will stay cultural. But I don't see in the foreseeable future really central banks giving up on cash. We will have cash, and we will have as much cash as there is a demand for cash, but it should stay there, notwithstanding all this technological revolution, which is good. And this is also why new, I would say, crypto assets or blockchain technologies have not been able to make more inroad, because this system is so efficient already that there is little, that they can really improve, and it's getting more and more efficient. I think it's going to be much more interesting to see in the future a different fintech, I would say maybe even a revolution, where you would move from the payment system to the real management of the financial services done possibly by third parties. And that's the area where I think we'll see lots of competition, where we're already seeing brewing competition, but will continue. You have worldwide, you have whole generations even that have not even got to use the credit cards. They moved from cash to the most advanced technologies in China, in India, or wherever. And now somebody will start, and is already offering them whole set of management financial services, which were offered by the banks or somebody else in the past, or they're offering new ones which did not exist before. People were not using. They were basically they will go 100 years in one go. That's a very interesting thing, but a very good one, I think.
What about Latvia? Can we're going to stay with cash, right? But maybe we can lead with new fintech technologies and be more modern than Estonia.
I would say that first I agree that in the midterm I can't imagine that there is no cash anymore, and I would say overall demand for cash is still on the rise. In Latvia, we are really progressing very, very quickly, and the latest survey shows that around 60% of transactions and payments are just digital. I mean, not using cash. But as I mentioned, on the other hand, the demand for cash also grows. But I do think that for the regulators, which not always are the central banks, but overall how to develop this financial innovation, there is this always very, very tiny balance, not to regulate to some point, really to allow, I could say, this technology, all new technologies to develop. But we know that if there is more than this point, that the question will be who allowed, like if you look on a Bitcoin, I mean, there is, you could say, you can't say who, yeah, but really this, on one hand, to keep the level playing field for the existing players, newcomers, whatever, fintech platforms, and at the same time, really to have this financial stability issues, you could say, kept. I think that's really what we should consider, and also how these innovations and central banks are doing this, also the Eurozone or ECB together, or Eurosystem, how these changes in technologies will change, and what an impact on monetary policy, on financial landscape, on financial stability, what will be the reactions in a turbulent or crisis time, and then the issues we are looking answers, and I am sure that still this will in progress for time.
Thank you. you. We have some time also for the questions from the audience. We have a microphone in the end, and if you would raise a hand, then they will bring your mic to you. Does anybody have questions? Otherwise, I will ask something about economic and monetary union, and then we're going to miss the last glass of wine. Yes? First row, gentlemen.
Yes, Gabriel Giudice from the European Commission. I wanted to ask a question following what Governor Vujčić mentioned before. It's about the link between fiscal policies and the indebtedness and inflation. Actually, you made the point before that, it's with the current situation where inflation has been lower for a number of years compared to the reference rate, it is difficult to reduce, let's say, the debt levels at the speed which was expected. Of course, it's not the monetization of the debt, but just a basic inflation, let's say, adjustment. Now, there are people who suggest that the difficulty for central banks actually to deliver on the inflation target comes from an increasing scarcity of safe assets. And before also, Vice President Dombrovskis also mentioned that the importance of having euro area denominated safe assets as a way to reinforce the role of the euro internationally, because you need to store this value in between transactions. So I just was wondering what your opinion is about this link between fiscal policy, indebtedness, monetary policy, and actually one element of the structure of the euro, where in fact we don't have a central safe asset, but we have local, national safe assets, which are in fact of diminishing supply, in particular the Bund. So I would like to have your opinion on that. Thanks.
This is basically a question on the economic and monetary union, on the completeness of the monetary union to some extent as well. Obviously, in Europe, it's a very different situation than you have, for example, in the US or you have in Japan, because here you have a common monetary policy, but you have basically 19 fiscal policies, 19 different bonds, and you know that one of the problems is let's say, is the fact how you then, if you, as a central bank, you purchase bonds, how you do it, and then there is this capital key. You have to do it in order not to be monetary finances. So you said you have to do it in a way that does not break this capital key, and that also puts then a limit in terms of the supply of the safe assets. This is what I think you're talking about, to also monetary policy in an indirect way. But I would say that what I had in mind was more that you have obviously a kind of a constraint on what monetary policy can do, but you have it, I would say, with or without this lack of supply of the safe assets. We should not expect that the monetary policy can do, I think, more than it does at the moment. If you, of course, it can go further than that, given the political acceptance. But you should ask yourself also then a different question, whether you want to go, for example, all the way that Japan did. What does that do to the whole economy and to the prospects in the future? It's going to be, for example, there you went that far that you have the central bank not only holding most of the public debt, but it also holds whole sets of the equity market. So parts of the Nikkei index are majority now owned by the central bank. So what do you do with that in the future? How does the central bank get rid of that? I can go in parallel to one example, and that was when George Soros, after harvesting the European markets, starting with the pound, went to Hong Kong and started to short the equity market. Central bank long the equity market. He lost money, but the central bank didn't know what to do for the next 10 years with the equity on its balance sheet. When they wanted to get rid of it, the equity market started to tumble. So in the end, as you remember, they were selling through the banks in the street in order for the markets not to understand when they are unwinding their positions. So I think one has to be very careful where the central banks go. Even if you have assets to buy, you should ask yourself first whether you should buy them. And the fiscal policies should, to the maximum possible extent, create a room. That's what I had in mind, to react, particularly when the monetary policy space is limited for one reason or the other. And my skepticism was only that at the moment, compared to some of my colleagues, I see less of the fiscal space, and I see that fiscal space also not distributed in a way that might be needed at the time when the counter-cyclical macroeconomic policy is really needed.
And I will just add to that, we haven't mentioned, but it's also, I think, very well known that for fiscal policies, I mean, having in mind the increasing expenditures on social protection and overall aging or demographic situation in the Eurozone, I mean, it will be just, I think, will restrain further fiscal policy, not increase room for maneuver. Yeah, so I agree with Boris what he mentioned, and I am not believer that monetary policy could say substitute of type of policies you need also to align economies.
Some more comments, Mr. Hansson?
Well, I don't know. I think there was a very complex set of issues. I think on this safe assets, I think the kind of, I'm very skeptical about the scope for financial engineering to, at the end of the day, give you a lot, because probably at any point in time, the kind of average solvency of a kind of euro area government is given by the policies and the inherited debt stock, and there must be like the economic equivalent of the first law of thermodynamics, that if you kind of shift some kind of something into a tranche somewhere and make something more safe, then something else becomes less safe. And at the end of the day, I think if you want to create more of these safe assets, you have to just start building these buffers and start running more kind of sensible fiscal policies and get those AAA ratings back, and then you'll have the safe assets miraculously kind of reappearing, but it's a long uphill struggle. So.
Thank you. We have time for one more question from the audience. Well, before we finish today, let me just ask the Commission today, and Mr. Dombrovskis also spoke about that the Commission would like to see euro challenging the dollar's global dominance. There is also a role for the central banks to play. Do you think that's realistic? Can that be done?
Well, first, I think it's a good thing that the Commission really propose now some issues to strengthen the euro's role globally. From my point of view, of course, the central banks could have a stake, but it's more political goal for the Commission now. We as the central banks, European Central Bank and national central banks, have a neutral stance on that. We have to think about the stability within the Eurozone. We have to think about the role of the euro, but if you asked in that direction, I would say that the national central banks should only have here a supporting role.
Would you agree?
No, I think generally the proposal that was outlined this morning by the the Vice President, I think is a very pragmatic, when you take sector by sector, very nitty-gritty issues, and you try to look at maybe not so actively promoting the euro in an aggressive way, but kind of seeing if there are kind of unwarranted barriers that you could just sector by sector kind of remove to increase this role. And of course, this role doesn't come at without any cost. I think if you have your currency is used more internationally, you can gain, let's say, some seniorage revenues from that. You get some prestige effects and so on. But on the other hand, what happens in the rest of the world starts influencing your own developments much more. So I remember actually when we were introducing our own currency and we were pegging it to the Deutsche Mark, I don't think the Bundesbank was out trying to make the Deutsche Mark actively making it an international currency. There was actually a bit of pushback on that, and I think understandably, because the less international you are, the more you're kind of able to kind of gear your monetary policy to domestic objectives, which is ultimately what central banks have as their primary responsibility.
From Croatian point of view, would that be an incentive that euro would become more globally used, or maybe?
Well, for us, it's more an incentive to have euro because we do trade with eurozone, because almost 70% of our tourism revenues come from the eurozone, from people who use euro. So and most of our reserves, most of our savings are in euro. So that's our main incentive. And for the euro to get more ground in the international forum, I mean, it can, but it will gradually, if the monetary union becomes more complete, as Ardo has suggested, or Balz before. At the moment, euro is, I think, 36% of the world payments. Well, dollar is 40%, so it's very close there. It's not a reserve currency to the extent the dollar is, and will not be in the foreseeable future, because U.S. is the dominant power. It has one monetary, one fiscal policy, and it will stay so for the foreseeable future. But it has 20% share there. No other country has more than 5%. So that's not bad for 19 different bonds with single monetary policy, I would say. And we should not really aim for something that is more than that at this moment. I would be happy with it if I would be a Eurozone member. And I'm happy with it being a future Eurozone member.
Mrs. Razmusa, but euro was used before the Greek crisis more than dollar in global payments. So we actually lost that first position. So we are now trying to get back and overtake the dollar.
I would say we have been, or had been, very dollarized economy at the beginning. Actually, the switch to the euro was related to the repack to euro. Then really we became very eurotized economy, and euro overall is a currency which is used by 340 million nowadays, just in Eurozone itself. Yeah, but I do believe that when others, those outside of the Eurozone, are looking for alternatives for currencies, that I have no doubts that the second one after the dollar, but to have this better trust and confidence, we need for sure, as colleagues mentioned, to strengthen EMU itself, and it's normally up to the debtors, up to the market, sorry, to trust debtor, or are we trustable debtor or not? And then I'm sure that if we really progress in strengthening fundamentals and also with strengthening EMU itself, it will come.
Thank you. In the beginning I said that talk about euro has become very technical and boring, but I guess that is not true. We can see that there are a lot of interesting things and new challenges that lie ahead. And I guess next 5, 10 years and maybe next 100 years of the euro, we're going to see how it develops and changes. And I would like to ask you to give a big applause for our distinguished speakers. And with that, we conclude the official part of today's conference. Tomorrow conference continues. And I would like also you to invite to a glass of wine in the next room where you also had coffee between the panels, and raise a glass to 5 years of Euro and the global dominance and future. Thank you.